Hello, tech traders. This is HB, and thanks for being here. We have quite a few symbols that people have thrown at me, so let's get started. This is something new I've come up with called Analyze Your Trade or Analyze My Trade. Bottom line is I'm going to be giving you a complete analysis on any stock that you desire. I just really feel like sometimes the questions that come up during the day aren't answered as thorough as I'm going to be doing today, including your and the analysis of whether the trend is bullish or bearish. And then we'll talk about support, resistance, targets. I'll show you where trend lines and moving averages are and things like that. So let's get started. And thanks everybody again for being here. Please post any additional symbols that you guys want in the room. And Lee, you don't need to raise a hand or anything. Just post it in the room like you normally do. Post anything you post. Just go ahead and post in the room just a symbol, and I'll give you a complete rundown. After hours today, Bill, one of our subscribers named Bill, I'm not going to use last names, asked me about TGI. Now, as you know, TGI, after hour, or just late in the day, announced that their company's up for sale. You can see the stock exploded, and after hours has a rising bull wedge. This is very bullish. The stock is likely, in my mind, to accelerate and or extend tomorrow towards 15.75, 16. Maybe as high as near 17. We'll see. Right now, the trend looks like this. Over the last few years, it obviously went up after the 2020 crash, came down in a 1, 2, 3, 4, 5 wave decline, completed that, rallied, and now this. Now, historically, the stock has been up in the high 20s, and way back in the 10, 12 years ago, we traded in the 60s, 70s, even as high as 85. So one can assume that if you take an average of the price on this, that there may be a deal, if it's going to be one, somewhere in the 20-25 range, in my opinion. But that's just a guesstimate. At this point, you want to look for overhead resistance, and the first target for me is 16.75. On a daily basis, you can see that stock dipped under support and spiked back up today. There's resistance along that line because of this high and this low. That's how you, and then when you draw that line back even further, you'll see that a rally began at that level. So the 14 and a quarter level, 14 and a half area, where it got up to today, you can see why it may have settled back and done this. If it's going to accelerate further, fine. On a very short-term basis, your support is 13 and a half, 65, and then way down here at 12 and a half. I hope that gives you a perspective now. And obviously, on a long-term basis, it's a tough call. But the way I do things, folks, is I'll take a measured move from one point to another. Let's just say the move from this period in October 23, the stock was trading at 7. Within by January, it was trading up as high as 17. So a 10-point move. One can imagine that from a standpoint of measured moves, this pullback low at plus 10 points gives you 21. This high here is 17, 18. So let's just say 18, 21 might be a place where a takeover could take place, or as much as 27. That's why I said 25, somewhere in that range. Anyway, I hope that answers the question on TGI. We have a question from Roger on Lilly. Thanks for being here, Raj. You can see that Lilly's been one phenomenal stock, probably the number one premier drug company in the world right now, with Wegovy and all the other drugs that they have, which is really a phenomenal company. Now, when I look at this chart, long term, it's obviously a no-brainer that the trend is up, right? Where does it go to? Well, if it connects to the channel top and does a parallel basis right here. And this is the angle it took out for a couple of years, and this is the angle, the accelerated angle. And eventually, a stock like that, Roger, and anyone else listening, will go into a blow-off mode where it will spike up and blow off. And that happens every stock eventually. When a stock is going long, going, it doesn't usually roll over. It usually will spike up and reverse. But right now, you got to carefully watch, Roger, the 970, 72 zone. You get through that, my target, believe it or not, is 1,200. I'm not kidding, 1,200. On the downside, the recent pullback low of 858.9 there represents an area near the long-term trend line as well. So I would say under 8.5, 850, 55 might be a stopping point. Always look at 50-day moving averages. That's imperative. I read a book once called Monster Stocks by John Boyk, B-O-I-K. I recommend everybody get that. It's a really cool book. But what he did is he recognized or analyzed every major move, a big mover. In other words, any stock in that decade, in the decades between 1910, 10, 20, 20, 30, et cetera, et cetera. In those 100, 115, 20 years, the market, he analyzed information. Where he got it, I don't know. But it showed that almost every institution who bought a stock was buying the daily chart at the 50-day moving average or near it. Here is a perfect example of a stock that bounced off the 50, bounced off the 50, bounced off the 50, and recently hasn't even gotten close to the 50. It's bounced off the 21, 21, etc. Here's a little bit of a decline below it and above it. Right now you're near the 21 again. So not to belabor the point, but this is a very bullish chart. Ajit wants to know about JOBY, and let's take a look at it. Well, obviously the stock was a monster here when it ran and exploded back in, I think it was April or May of 23, when it went from 372 to 12-ish. Nearly, let's just say it tripled in a couple months. And then it came down from this big base. Let's look at the daily chart. Now, when I look at this, it's awfully choppy, to say the least. I had a buy here when it broke out, and it got to the target and backed up. Right now, breaking out of this base pattern, it looks bullish. But the fact that it pulled back and closed right on that line tells me it's got to hold in its zone here. Ideally, from a technical standpoint, you don't want it much lower than today's low. So 535 and then 520, where the 50-day moving average. This is the zone of support right there. The zone of resistance and the target would be 6.2535, followed by a move up to maybe 685. Longer term, perhaps it gets back to 7.75, and should it break across that triple top there, then I'm looking at $9 on a longer term basis. So conceivably could double over the next weeks and months if it breaks out. That's a big if. I do like the fact that it popped on big volume here. 70 million shares traded that day, and it went from a close of 480 to finish at 614 with a high 632. Didn't follow through though. That surprised me. I thought it would. I was about to put a swing on this one. So I do like it, but I'm cautious right now as it's pulled back to support. So the bottom line is that there's reason to believe the stock can make it up to near the $7 range. And so again, support at 525, 540 in this range right here. So it's either a buy on this pullback, and the pullback is coming back on lower volume with good technical. So let's just see if that's able to make it out of this long base of a period of the next few days and weeks. Lee, this is analyze your trade, so you can ask me questions, and I'll answer that at a later time when we're done, okay? Because I'm really trying to get everybody covered. CELH, from our friend from the north and colleague GC. Gilles, this is a really interesting stock on a long-term basis. I loved it in here and in there. And I mean, over a period of 3-4 years, it went from literally under $1 to $100. There was a price, obviously split adjusted, but it was a monster move, and it paid the price. Eventually, when the stock did a split, it got hammered back. And it was also obviously not the most stellar earnings report. So the question is, considering the volume today, do I see a bottoming pattern? Well, I would say yes to that question. But one day doesn't a rally make, okay? But I'll also say this. When a stock explodes off a low with a breakaway gap through the moving averages, if it gets any follow-through whatsoever, a new trend is started. So for me now, I'm looking at the following targets on CELH, and I'm seriously going to consider putting a swing on it because of that. If you look mid-September, the highs in this stock We're at about 35.5, 3/4, 36. Today's high, 35.48. And this declining 50-day moving average, should we break through that, I would look for a run up and a pullback, and that pullback would be an ideal situation in terms of a breakout. Now today's volume of 31 million, only challenged by this high here of 31 million back in February 24 when the stock exploded out of a trading range and kept going for a bit before double topping. But that's historic type volume, and it comes with a breakaway gap. Notice also, and one of the things I always look for when a stock breaks out, how did it close? It opened here on a big gap and pulled back to the moving average and then closed up here. Excellent close. And by the way, I believe this close is slightly higher than the highest close we had since it broke down early September. For me, a significant day technically, and CELH is definitely something you want to keep your eyes on. If anyone else has a symbol or anything else, please post it. In the meantime, I'm going to answer some questions that came in to me before. Wave, interesting stock from Roger, a different Roger. Spiked up to 660, pulled back, and has formed a beautiful wedge in here. Take a look at this beautiful daily chart. Also, note, the stock was in a long downtrend. It's in one of those utilities, independent power producers that have recently, as a group, has had a really big run. This includes NNE, which is another person asked me, and I'll get to that in just a moment. But to give you my take on this, the explosive breakaway came in April, of course, and then it had a 1, 2, 3 wave corrective kind of falling wedge breakout. Notice this line where these tops are, that rally, this rally, and that rally. So obviously when this stock broke out here just recently, ran up to what I have as a target. Why is that a target, folks? We'll take a look at these highs back in here. So it ran up to that zone resistance-wise and formed the wedge. This is a terrific looking low price stock. Probably should be a tech trader swing. Where to? Well, I go by several methods. Prior highs are always important to me, but I also go by measure moves. This move here, the thrust, 1 to 3.5 or 2.5 points. From here, 2.5 points, you'll see, gets you to 475. We got through that and then some to 6 3/4. So that was a much bigger move than one might have anticipated. But here's the bottom line. My target now, 825. Obviously, you got to get through the spike high of 6 3/4. Where's support? Anytime a stock breaks out of a base, multiple tops, resistance becomes support when broken. So therefore, you see the pullback here? It held above that level. You can put a support line through there. That's the zone of support. Also, the 50-day moving average is rising, and it's just below that level. So between 4 and 440 is a big support level. Measure this move here, and you may have something. 335 to 660, nearly $3 and 3 1/4. If you put 3 1/4 on this pullback low, you have 750. For me, the measure move measures 750. Let's get it above here first, and then I think your next target on wave is 750. Atul, thanks for being here, Atul. ASTS, well, obviously it was a huge winner for us as it popped, formed a wedge. We put a swing on it. The damn thing went from 3 to 40, no kidding, more than 10-fold, 12-fold, whatever you want to call it. But ever since that peak, now take a look at the volume. You see, when a stock breaks out, that's breakout volume. But after it runs, and then it gets big volume, a lot of times that comes out near a high. This came at just before the high at about 33.5. Within a couple days, it reached 38, 85, and 39 zone. Notice it reached that high on lower volume, and there was even a big sell day there. So for me, that was a sign of a top. Anyway, you are in a falling channel. So as Atul, you want to be able to wait, in my opinion. If you're in it, that's one thing. You better be careful about anything that slides under 21 65 or so. Now today's low was 21.90, and the low here 21.68. So what we're looking for is first the declining top line to be broken, this whole pullback channel to be broken with volume. Volume is key for me. If it does it without volume, where volume comes and is not a price movement, it's got to be both price and volume. That's why I coined the phrase the price volume surge. You got to get a surge that has both price and volume in it. Once you get across 26.5 to 3/4, maybe 27. Above 27, I think the stock has room to run. 31.5 and 36.7 zone, maybe more. But terrific chart, but it broke the channel. Doesn't mean the angle of it isn't changed a little bit, something more like that. But you don't want it below these two lows to keep a stop in place. Let's go to Richard, who has a question about CFLT. Now, interesting stock. I like this a lot for a while there when it broke out, but it never followed through. Then it did this. It's a very broken pattern. What you want to take a look at is this declining tops line. Where does it come in? Right about there. Also, what else is good or bad about this stock? Well, it got crushed here, bounced to resistance. It's back up there. But this time it didn't get to the moving average, neither did it this time. However, the third try, it's back above all three 10, 21, and 50-day moving averages, and it closed at the high of the day going away, near it. 22.29 was the close, 22.40 was the high, but at the very upper end of the range, on an increase in volume to 5 million. Now, not a ton of volume, but pretty good stuff. What I would say on this one is looking for a move to 24, 26.5, 27.75, and we'll see how it goes and whether there's volume or not. You're welcome, Atul. GC wants to know about IoT, Internet of Things, and that's a great question, by the way. How do I define a target on a stock that's at an all-time high? Well, I'll show you, big guy. Here you go. First of all, you have a long-term channel drawn across these highs parallel-wise. You also have internal trend lines, which this stock is near the high of. On a near-term basis, you can determine a trend or channel because it might be accelerating at a certain angle. See the angle here? So when you drill down on this, what I just drew in, you'll see the following. It appears that a near-term chart target is 54, just because it will be at this channel top. Now, I want to show you something else that's interesting that I came up with years ago. It's called the upper parallel channel. You'd be surprised how often this works. Something that I've come up with. I'm not sure any technical analyst uses it. You take the width of this channel and you take what looks like potentially an angle of ascent off of a different high, and then you pull this back a little. I'll show you why. You want this to be about the same width as that channel, but near that. So here's my targets if it gets to 54. Now I would go mid-channel, always go mid-channel, 62, upper channel, 70. So my targets are going to be 54, 62, and 70 if this run continues. On the downside, obvious support is right there, 42.3. Near-term support is at this pullback low at 45. So let's call it 45 and 42.3. Those are your support levels. Well, we're at resistance, but momentum from today's action could follow right through to 54. If it should blow through that with big volume, we'll see. Right now, this is at an all-time high. The long-term channel, GC, shows a run up towards 80, 30 points from here. Is it possible? Absolutely. Remember what Jesse Livermore used to say, buy high and sell higher. His success always came on stocks that were breaking out to all-time highs that had no overhead resistance. Nobody looking at break even, get out, and therefore a stock had what they call blue skies ahead of it without a lot of resistance. I hope that answered your question, GC. That's how I get targets. Again, feel free to post any symbols you have, folks. Okay, let's go back to where we were and look at the next question. Marty has a question on USO. This is the oil ETF. You know, just when everybody was saying, well, oil's getting hammered, I was negative on it when it broke this line and came down here and rallied to it and started to fail. I thought, wow, if this goes any further, it's going to get crushed. Turned out to be a V bottom with a right hand extended. And then it spiked to resistance right there. See this rally high? It got to it and pulled back. What I would say right now is key short-term support is 73.5 roughly. That's 4 points from here. This double top, if taken out at 79.25, could lead to 83 or 82.75. This high here, 83.25. Something in the, and this high here, 83.25. You can see that this is this and these three, this triple top is going to be monster resistance. If you're trading this and you want to go long, we have a 1, 2, 3, 4, fifth wave's underway. I'm a seller if I see oil at 82.3. Or if it drops under 73, you must stop it because who knows where it goes. On a short-term basis, on a longer-term basis, you know, you can see that this has been in a trading range oil for 2 years now. The multi-year high that we saw back in 22 was about 92, I think it was 91, 92, right? So if it does get through the 83 range, your next target would be low 90s. Susie asked me to do a couple charts for her on DDOG, which again has rallied back up like many stocks to a resistance zone. Now it actually did reach in February 137.8. Yeah, there, and a couple of times reached 130, 2-3 area. So I'd have to say that if you're looking for resistance and a target zone, it would be a little bit above here, 133.4, or maybe 135. Should it get through that, then the longer term analysis comes in and you have to do something like this. Draw your lines across all these, we call rising tops lines. And sometimes it intersects with lows. In this case, it does. Now we have a top. How do we get the bottom? We do this. Look at that parallel channel. This is a 1, 2, 3, 4, folks, long term. But that means to me that long term, there's a possibility this stock runs back up towards 160 and eventually makes a run at 180, 85 up in that zone. So it's 130 now. We're looking for 30 to 60 points, 30 to 50 points on the upside if it breaks through here. What do you do on the downside? You don't want it below 118 where that support was after breaking out of here. The other symbol that Susie asked me about, she asked me for 2. Since she's not here, I'll give her a little leeway. I think it was CrowdStrike. Hang on a second, let me pull it up. Well, I'll get to that in a minute. Let's move on. Lee, are you putting the symbol nice up? Is that what you're doing? Or are you saying nice? All right, Lee wants to know about nice. Is that correct? Okay. Yeah, okay. So let's take a look at this one. This was a great stock for many years, many years. Look at the long-term chart. I mean, can you believe this one? In 2003, you were looking at a $3 stock. 18 years later, 318. So it went up 100-fold. It took a long time. Let's look at the short-term basis. It finally came down and did it in a 1, 2, 3 basis and then broke out. This breakout went right to this area of resistance and then it collapsed. So Lee, you got to look at where is this in relative to historically. Well, back in 23 October, it was 149. They ran it all the way back up to 270 and change and dropped it all the way back to, you guessed it, 151. Right in that 149.50 range. So currently, that's key long-term support. Obviously, you don't want it below that at any cost. So stop on a 150. On a long-term basis, that's the key there. On the downside. On the upside, it's possible this is a left shoulder head and a right shoulder. It's a little choppy, sloppy. On a daily chart, you can see it a little bit better. Left shoulder, head, right shoulder. It's not ideal. The volume pattern is there, but it's not ideal in terms of, in terms of the inverse head and shoulder structure. But 186 3/4, triple top. Okay. Honestly, Lee, I wouldn't touch this to a 10-foot pole until I got above that because there's plenty of room to run. But some might do this. If you see, Lee, this can go above 174.5 3/4, then you can add a little, especially if there's volume. If it goes to 185.6, you can add more, a lot more, because then your target for me is going to be all the way up here at 215 and 235. But for now, anytime a stock comes down like that and does this, it's either a base or, and here's the downside potential. I'm looking at it as a bullish pattern, but you can also be realistic about it and say, yeah, but that's a bear wedge. I see it. So until it breaks out, to me, it's not worth being involved with it. There's too many good-looking charts. This stock, until it breaks, I would rather pay up on any stock, knowing that it's on its way back up. Like, for example, don't buy it here, buy it there, and watch it go there. Same thing here. So that's my take on that one. For GC, AEHR, obviously looked great here. We put a swing on it. It ran up to the target. But boy, it did a 1, 2, 3, 4, 5, didn't it? And it was ugly. Ugly. Dropping from 22.5 down to 11 3/4 roughly. Today was a significant day technically, at least after hours. Let's take a look at a 1-minute chart. I believe, GC, this is earnings related. You can confirm that. I think you mentioned that earnings are due after the close. Well, Wall Street likes it. It spiked, pulled back. It spiked again, formed a little coil, and broke out. There's a mini one. This is a very bullish chart. If this gets above 1535 tomorrow or the day after, then it might have broken out. Take a look at this high here, 1565, 69. So let's just say above 15 3/4. I would look for 18 3/4 and 21.5 3/4. But again, I always say this to everybody. One up bar does not a trend make. It's a good start. It broke through 2, 3 moving averages today alone. The 10, 21, and 50 gone. The stock went literally from 12.45 to 15.35, nearly $3 on 4 million shares, which is a lot for that stock. So very bullish posture. It needs a follow through. SERV. Here's a stock that went public, didn't do much, and then all of a sudden one day we wake up and it goes boom chakalaka. From how about 392 to 897, 5 points, pulls back and then rips all the way into the 20s. Now, after a 6-week falling wedge, it stabilized. 4 days ago, it popped. It did not break out. And today's action isn't exactly terrific. I would rather wait for a stock to take out 10 3/4, and then you're looking at 13.5 and 17.18. Until then, it's a definite maybe, but that's it. Sloop John B's here. Hey, John. AFRM. Nice chart. As you know, it was a tech traded swing for a long time, mostly in here. again when it broke out, I believe, I don't remember. I think that's a current swing from my recollection. Recent high 40, let's call it 48. The pullback over 3 weeks back to 37. So it lost 11 points, but it held where? Right at near the prior. See the gap and the pullback low and this. This is all support. With a rising 50-day moving average and trend line here, you can extrapolate the possibility of a breakout. I would give you one warning though. This is a left shoulder ahead, and this right shoulder comes on low volume relatively to where the left shoulder was. That's a head and shoulder formation. Be very careful, John. What we're looking for, and you need to get this to punch through with volume, $44. Then you may be looking at 49 and mid 50s or more. At least for a retest of that high at 52.5. You got to be awfully careful though. I do like the structure, the breakaway gap, and notice how it held that gap twice, at least for now. Very promising. One way to look at this as well would be to connect these highs, and you got a chart longer term in the mid 60s. So 52 and 62, 65, definite possibilities, but the stop has to be under the spike low here, under 35.5 3/4 exit stage left. That completes a head and shoulder top, and you're in trouble. I'm sure you got that one, John. Okay. Anyone else with a question, feel free to post it. Let's go on to some other questions that I have. CrowdStrike from Larry. Well, that's a good chart. Why do I think it's a good chart? Well, first of all, long term, it was excellent here and here. In a long term, long term, 5-year basis, this is a 1, 2, 3, and the fourth wave is developing. I don't know how far they take this long fourth wave. It may be done with that pullback. Can't tell if this stock's going to have enough energy to make it up to there. But I will say this. If they're rolling over hard and getting crushed from 400 to 200, amazing, cut in half. And it only took a month. They crushed that sucker. V bottom, there's the turnaround bar right there. See that reversal bar? The run up and the V, this here is called a right-handed extended V. It broke out and flagged and now popped again. But where did it pop to? Right to the gap. First order of business, fill the gap to 342. Okay, if you get through that, you might have a retest of that area at 375. So CrowdStrike targets 342, 375. On the downside, no way you want this below 272. And there's Paulette. Hi, Paulette. Well, Paulette, the NVDL is the tracking stock, among others. There's NVDX too. They both look the same here. NVDX, NVDL, they're exactly the same. Their difference is different prices. So, Paul, if you're going to buy the NVDL, it's the exact same price, but liquidity is pretty good on both. Then why not do the NVDX? Be able to buy 5 times as many shares. Leverage. NVDX 17, NVDL 70. See what I mean? So that's up to you. But you want to know whether we should buy NVDL on pullbacks. Paula, the answer is likely yes. NVIDIA is a market leader, and if the market is going up, NVIDIA will run. I'll tell you this, though. 64.5 is support. Why? Because that peak there was 64.5. It broke through it. It's consolidating. So if it pulls back towards 64.5, it might be a buy. My problem is this has too much momentum, and it may not get that pullback. This may be it already. The pullback came here. I'm going to show you something else. Here's your angle of ascent. So there's a dual, maybe triple, what I would call juxtaposition, lateral price resistance, short-term channel top. Not quite, the channel top's up here. Yeah, this channel top. We get through here, your target's 81.2 bullet. So therefore, I'm looking for 10 points on NVIDIA if the market melts up. I'd be awfully careful with this stock, though. I think it's over-owned. Nevertheless, there's your answer. Google, I want to point out, Roger, one thing you're completely missing. Anybody that really knows technical analysis will look at this chart and say, you know what? If this thing holds here and runs up, what will it have completed? That's right. Left shoulder, head, right shoulder. So we're on the shoulder line, which is something I've always very important support for me. 160, 161, 162, 161. So you can see that this is support right here. You can buy Google or Google options or GOGL or whatever the ETFs are for the Google is, but stop under 160 because then you're vulnerable to 155 and maybe even 149. If it breaks out, if it breaks over 189, let's call it, 170, 169. There's the neckline, 169.90, 170. Let's take this out for a minute. Now you can see it a little clearer. Technical Analysis 101 says when you look at the head and shoulder pattern, the way to measure the move will be from the head to the neckline. The head, 148. The neckline, 161. And when you look at it, 13 points. Believe it or not, you add 13 points onto 170, and you have 183. That comes in right there. My two targets for this one is going to be 178, 183. If it breaks 160, if it breaks 170, then I'm looking for 78, 83, and maybe if it gets jiggy with it, all the way up here, retesting the high 192. But keep in mind, we are right on support. If it doesn't hold 160.61, it could come all the way back down and double bottom. That's my take on Google, Roger. In terms of Elliott wave structure, it's a 1-2. The longer term structure shows this is a 1, 2, 3, 4, 5 wave move down, and then a move up. That's 1 and 2, and this is 3. As it turns out, so far it's a 3-wave corrective of the longer term trend. With the trend line break here, this stock looked awfully bad here, only to recover and do this. Now, doesn't mean it's reestablished a trend yet, because it could very well do this. It fell right there. But for now, I'm considering this a down channel with 1, 2, 3, 4, 5 waves there, 3-wave corrective wave there, that's wave 2. This is wave 3. Okay, it's possible this is wave 4, Roger, and then we come down to wave 5. We won't know till this either breaks down or it breaks out. Lee, I got to tell you that Avi's a great friend of mine. I think he's a phenomenal analyst, but lately I'm just not happy with his hedging. Every day I see his stuff, and it'll do this if it does that, and it'll do that if it does this. The market has a chance to go to 5,900, 6,000. Now all of a sudden, one down day, and he's worried about the market falling apart. I do agree that on a long-term basis, the market's long in the tooth, so to speak. The market always goes further than you think it's going to go. It'll always go down further than you think it's going to go. And there we go. Avi's great. Avi's close. For those who don't know, Avi was a subscriber of mine. I encouraged him to get his own site. That's how good he was. My ex-partner created a site for him, and now he's an expert at Elliott Wave. He's all over the world. Good for him. I'm very happy for him. He's got a terrific demeanor about him, and he knows his stuff. But he's not a stock guy. He's a trend guy. Okay, I'm the stock guy. All right, some more questions. Anybody have a question? If not, I'll go to the questions that were given to me prior. I do want to cover those. I got a question on UVXY from Nancy. And she wants to know, what kind of pattern is this?
And is it about to break out? It does look like a big base, but this here spike up and blow down. You rarely see this kind of V top and bottom and drop off. I'm going to be much more interested in UVXY if I see it over 32. 32.18 here, 31.42 there. You can see if it breaks through here, it can go vertical, to 35, 40, 45, like it did there. So watch it carefully. Obviously, if the market blows out, the stock is going to get hammered. It's really volatile. It is not something you want to swing. It's strictly for day trading. That's my take. Dangerous stock. Okay, Advanced Micro Devices from Lenny. Obviously, HP loved this stock for years back in 1920, 21, 22. And then it got crushed in a perfect 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 wave decline. And then it worked its way back up from a low of 55.6. It got all the way up to over 200 and change. So it quadrupled. And then it came down. It's awfully choppy in here. Today was a bad day for it. I would say stop under 158. Secondary support, 150. You get below that, forget about it. Look, when I see a choppy chart like that, there's no point in being in it. There's 12, 13,000 stocks out there. Why push it? Get a stock that has a pattern that you can work with. Simple as that. Now, some of the people in this room a couple people have asked me about AAOI. And almost every day you see this on my Chart of the Day webinar because it's a beautiful uptrend and it's a tech trader swing. Pop, flag, pop, pull back. It's a beautiful 1, 2, 3, 4, 5, and then a pullback. Now it's resuming the advance. The last couple of days were inside days. This stock is ready for prime time, meaning if it gets over 17, it could go vertical to 20, 23, 24. Good rising, unbalanced volume. Volume is decent. I love this setup. It looks higher to me. Charlie sends me a question on IBM. How about this chart? Not many of you are aware that IBM's at an all-time high ever. You know what this stock reminds me of? Microsoft. For years, it went nowhere. And then it breaks out, it's running. Basically, IBM is in a large 1, 2, 3. Now, you might call this a 1, 2, 3, 4, 5. I won't. I would call this a wave 1 and 2 and 3. What does it tell you, though? Pretty obvious IBM is short-term overbought at a long-term channel top, or at least an intermediate 2-year channel top. I guess that's long enough term. Love to see it come down in the 200 to 15 range, and then eventually move into the mid-250s or 60s. But IBM is very bullish, no question about it, with strong momentum. Doug says, what about Palantir? Well, a lot of you remember when I noted this inverse head and shoulders pattern back in 23, a year ago. Here's a 2-day chart. You see the left shoulder, head, right shoulder? There's your breakaway move. Breakaway gap, no less with big volume. All you need is one big day like that to trigger this kind of a move. This stock went from 8 to 45. 5, 6-fold, 6, 7-fold, whatever. And it's still going. Now, my long-term chart always said 44.5. Why? This spike high was 45 even. So that was my goal. Today we hit 43.88. Close enough for government work. And at the channel top. Does it have momentum to blow through and just keep going? Sure. This could be 50, 60, 70 before it's over. But I'm telling you, it's at resistance here. So extra cautious and keep tight stops on it. Where would I put a stop? If I'm being real, on a short-term basis, under 36, I'm out. Now that's 7 or 8 points. You may want to keep it closer than that. You go to an hourly chart, probably stop under 38.5, 39. Yeah, right there.
NNE. A question by Norm. NNE. Well, first of all, here's your daily chart. I'm sorry. There you go, NNE. Now, we all know how this stock went ballistic here. And it 1, 2, 3, 4 in a big fifth wave. Formed a wedge and rolled over. Fifth wave consolidation, less reliable. Came down, double bottom, broke out. We put a swing on it. It's been a tough road. Stock is very volatile. It's in the right group, though. The nuclear energy group. The way I look at this right now, there's your rising channel. There's your support. This stock needs to hold 15. Next target, 22, give or take half a point. If it gets to 22, we can see 28 and 35. This stock is one of those stocks, like it did here, that can just go ballistic when it breaks out. Again, you know where short-term support is, your short-term resistance is 20.5. You get through that, we're in good shape. And Jim wants to know about DJT. Well, obviously, the stock went ballistic when Truth Social came about. Then the stock got hammered. And you can see how late it's been in a nasty little downtrend until the reversal. So for me, here's a stock that went from 82 down to what, low teens? How about 11.75? But it has more than doubled in the last 2 weeks. It broke through the moving averages. They've crossed over. Today was another good day for it. We day traded it. And well. But it's at resistance here. Next target, 30.31. There is some resistance at the declining top line at 28. This should be a day traded or a swung here. I don't, it's just too volatile, I think. But it might be very profitable. As long as it holds, in my opinion, 19.5. If you see this gap tomorrow and run, you might catch it in the 30s. Once it gets going, you could do this, or that, or that. It's already done that. So, but unbalanced volume is huge. The stock's being bought big time. And it has strong momentum. Robert wants to know about Delta Airlines, DAL. Well, the airlines have been a tough road to hoe, but look at this base and a 1, 2, 3, 4, 5. I don't know. It's like I'm not an Elliott wave expert, but I know enough to be dangerous. I can tell you that when you see 1, 2, 3, 4, 5, and particularly when the fifth wave accelerates and blows off like this, you've got to be a seller. Or at least keep raising your stops so that to protect the majority of your profits. In this case, the stop would have been right there. It came down and reversed, and that's where it broke. So you were out at 87.5. Within a couple of months, down to 74. And you can see, I'm sorry, I got a wrong stock up there. My bad, folks. I thought this looked weird. Delta Airlines, not DAC. All right. I'll say that looks too good for Delta. Okay. Delta Airlines, obviously the airlines are a very volatile group. Here's a weekly look. We had a big run in the beginning of the 2012 to 2016, crushed in 2020 when the whole group did during COVID, and then rallied. Since then, the stock's been in a large basing pattern. It's a tough stock to chart. I will tell you this. It looks like the semblance of an uptrend is underway. This might be a blow-off. An overrun. I call this an overrun. Recently, it ran back up. They had a good report, and then it backed up. But today was another good day for it. Keep an eye on this one, over 54. Target is 62.3.
Above that, it can really move. But on a short-term basis, you don't want to see this below 46, in my opinion. Okay? Intel from Iris. Intel had a really nice run from 09 to 20, taking it from 12 and change into the 60s. Then a rollover. This was a tech trader swing. It went long. It did great. It went from like 24 to 50. And then it got slam dunked. I hate this chart, and I don't like the company. So this, for me, in a trade, what you see, what you think. Well, if I don't like the company or what they're doing, and I like their competition better, like NVIDIA and AMD are killing this company. So why even consider it? This is a 1, 2, 3, 4. If it doesn't break out and rolls over, I'm not kidding. This stock could be in the high teens. That's how bad it looks. So, by the way, tech traders, we're coming towards the end of this. It's going to be an hour long. So if you have any further questions, post them now, okay? MSTX, somebody asked about it earlier. Yeah, this is the tracking stock for MSTR. And Lee has a question. Is this a good re-entry point? Lee, only if it does this. Now, if you're going to enter it here, based on what I'm seeing here, if it doesn't hold this, you got to stop it. 31 gets me out. If it's 31, it'll probably be 26.7. So, I mean, it's a 1, 2, 3, 4, 5-way move. So for me, careful. And I would rather wait for this. If it surges over 38, it could be in the low to mid 40s, if not 50. But for now, it's a definite maybe. That's all I can say about it. LITE from Mary. So LITE V-bottomed, ran up, double topped. By the way, we put a swing on it when it gapped up right here, if you remember. I think it was about 50, 52. It made it up to 70, almost 69, and it still stared up its way higher. I love this look. It remains a tech trader long-term swing. In particular, impressive, the triple top was broken from the flag, another one, and another flag. Looks like it wants to stair step higher. My target is 76.84. A couple more, then we got to end it here. So if you have a question, post it right now. DELL. Well, as you know, DELL was a tech trader swing when it broke out right there, back at 56 or 7 in September. And it tripled to 180 and then some, or 179. When it broke this line, it was stopped right there. It got plunged. V-bottomed right hand extension and move up. I really like the look of this. I don't like the technicals. I don't like the volume. I like the price pattern. Anytime a stock goes above the moving averages, they cross over and it consolidates beneath them. All you have to do is put a stop right there under 118.5, 3/4, and you're covered. If Dell's going to make the move, I think it could. 132 and 150 would be your targets. John, you know how bad a question that is. If I could pick one stock right now for a multi-day trade. I got a whole list of swings, and I'm not going to. It's like saying I have 10 kids, and which of those kids are my favorite? I mean, there's just so many good ones. There really are. And from 1 hour to the next, I'll like them better. Go to the swing trades that I put out in the last 4, 5, 6 days, and I would consider those the most recent ones, the hotter ones right now. I'm going to call it good now, folks. That's it for Analyze My Trade. I hope you liked it. I'm going to be doing a lot more of this on a monthly, bi-monthly basis. So please be here the next time. If you have any questions that weren't answered, please feel free to
post them in the room or send me an email to harry@detectrader.com, and I'll be glad to get to your questions. That's it for tonight, everybody. Thanks for being here. I appreciate you, and I will talk to you later. This is HP signing off. Have a good evening. Let's make some money tomorrow. I'll talk to you then. Bye now.